Hello, value investors. Thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today, I want to talk about Snap. So, Snap just missed its quarterly results, and the stock sold off by approximately 20% after hours. I want to talk about why that's not actually such a big deal. I want to talk about its revenue growth rates. We're going to talk about its underlying business and how privacy changes at Apple have impacted this, but actually this is more of a no news event, and that its underlying performance is actually stronger than many would believe. So I'm going to just jump right in. So here's the thing. So the guidance for Q4 points to approximately 32% year over year. So if you think about it, for the past 5 quarters, Snap has been growing at approximately 50% or more, okay? So particularly noticeable is Q2, which was up 116%. So investors have kind of been expecting to see this very, very fast growing company at 50% or more, okay? That's what the analysts have been come to expect from the company. Yet as we approach Q4, it's just not there at 32%. So there's this dramatic misalignment between expectations, expectations and what the results are. But I actually believe that this is actually less of an impact than you may think. So here's the thing, right? If you look here, you can see previously investors have been saying, okay, everyone's gone to COVID restrictions, social distancing, and Snap has seen a bump in its number of users using its platform, but then this is all going to fizzle out. Well, as it transpires, we're more than 5 quarters out, and we can see that it's still growing. The platform is still growing, even including in the more mature market of North America. So it's a fact that it's quite interesting when investors are kind of expecting one thing and building a narrative around one thing, but when the facts come out, actually it's not how it is. You can see across Europe, rest of the world, North America, Q3 results, the platform grew in terms of users. Snap already reaches now 500 million users. So if you think about it, it's a demographic that's very hard to reach. You're talking about, I think it's 14 to 30, approximately 14 years old to 34 years old. 13 years old to 34 year olds. So the 75% in the Western world are being reached through Snap. And it's quite interesting. So if an advertiser wants to get in touch or influence or connect with this demographic, there's no other social media platform that's going to give them that, and with the tools and the scalability. Now, that's the problem, right? So everyone has known for a while now that Apple's changed its privacy, and what this has happened is that it's not very good. Apple's measurement tools are not very good on Snap's platform to allow advertisers to measure and iterate the adverts. It doesn't give them an ability to see what the conversion rate is, how effective it is. It doesn't give them a very good analytics. So what Snap did, Snap tried to give advertisers some analytics, but it only works on their platform. It doesn't work across different platforms. So right now there's this kind of middle period where you have to use Apple software and then to measure across platforms, and then you have to use Snap's software to measure within the first party data in Snap's platform. So it's just a bit of a headache, and investors and advertising companies are like, okay, which one do I use, this one, that one? It's a bit complicated right now, but this is just a temporary thing. So if you had 10 years of working things one way, and then all of a sudden in 6 months you have to kind of figure out a new way of doing things, advertising companies are like, okay, I don't really know, but this is just a temporary thing, and ultimately technology smooths this out. And you can see, as I already described to you, the number of users reaching Snap continues to increase. So ultimately, yes, this is a very, very strong platform, and it's showing no signs of slowing down. The other thing that I wanted to highlight is that there's a clear improvement in its profitability profile. You can see here that free cash flow went from negative 70 million to positive 52 million year over year. So if you remember back to Q3 2020, it was actually a pretty strong quarter for the company. The revenues were up more than 52%. So it was already a strong quarter then, and even then, on the back of that, even on the back of strong quarters, it's improved its free cash flow profile. So, and you can say, okay, the free cash flow is strong because 300 million of stock-based compensation is getting out of your back. But if you look here, look at the net loss. Net loss last year was negative 200 million, and right now was negative 72 million. So even on a GAAP metric that includes the stock-based compensation, there's a clear improvement. As the revenues continue to scale up, bottom line profitability continues to improve. So I think that all in all, this is a very attractive business. So Snap is valued at approximately 18 times forward sales. If you compare with Pinterest, that's about to be acquired by PayPal, it's rumored, it's being priced at approximately 12 times next year's revenues. Now, Pinterest is okay, but it's not really on the same league as Snap. Snap is just a machine. I don't have any position here, but I'm just saying, right? Snap is just such a plowing forward machine. It just continues to grow at such a rapid rate that Pinterest is not really, we've already seen that the number of users on Pinterest has been fizzling out for some time. So if that is the premium that that the PayPal is paying for Pinterest, in the after hours, you kind of get approximately 18 times forward sales for Snap. It's not that expensive. If you think about it, the way to really drive forward your returns is to buy stocks that others don't want when others don't want. I often say, buy what others don't want right now so you can get the results that others don't want then. So there's a quote here from Warren Buffett that I stick in here, that the stock market is a device for transferring money from the impatient to the patient. So if you want to buy into things that others don't want to buy, particularly when it's a high quality leading business in its sector, and if you just hold on for that for approximately 2 years, you're going to do a reasonable return on yourself. So it just, the question is, so there's no question in my mind that this is a high quality business. There's no question that it's gone on sale. The only question that needs to be answered is, how long will it remain on sale for? So if you want to find out what kind of stocks I'm investing in right now, don't forget to check out our marketplace called Deep Value Returns, where I help you become a better investor. I handhold and give you a framework of how to think about investing. Okay, with that aside, guys, I hope to see you soon.